Good afternoon, everybody. This is Chris Robinson Ag Marketing, with today's post-close grain and livestock comments. I missed this morning. I had some stuff going on here, so I wasn't able to do the morning comments. I did send out my letter. Hopefully, you all got that. If you didn't, go to robinsonagmarketing.com and sign up for it. I also posted the weekly private client podcast. 20 minutes. I went through and really dug into a lot of charts and tried to give you some explanation as to what we're looking at as far as what are good chart levels. My background, my first job when I got to Chicago, I ended up interviewing with a company that did a lot of technical analysis. It was called Optima Investment Research, and I was an analyst there for 6 years while I was learning how to trade as well. So I got a lot of years doing it. Hopefully, the information helps you. You're certainly going to learn something. You may learn that you can't stand technical analysis. That may be what you find out, but it does matter. Levels are key. And on that note, let's take a look at what happened today. We can't get any follow through uh, bids in the grains. We had a nice little bounce. March corn had traded up to 31 and a half. We settled down 2.25 cents at 28 and a quarter, 7 cent range there. March beans all over the place. It looked like we were going to really push higher. Good recovery in the beans, though. We got to 1076, but again, there's no legs to it. We broke almost 16 cents. And if you're not familiar with how volatile beans can be, get used to it. We're going to regularly have 13, 14, 20 cent ranges, I think, in beans here for a while. So kind of got good news, bad news. We did make a new high for the year, actually, believe it or not. We got back up to where we were on December 29th when we traded today in March beans at 76 and a quarter. The only problem is we settled lower on the day at 61 and three quarters. So an outside day down. The risk is that we're going to take a run back down to 1038, which is the low. We bounced off twice. If I'm long beans, I want a floor. I want some sell stops because I don't want to get run over if beans get after it again. So we're heading to the time of the year where it's all going to be about how big is the crop that's coming out of South America. The Chinese auctioned off a bunch of internal grain. They made room for our soybeans. They have been purchasing our old crop soybeans, but now, again, the problem with which makes it so hard to trade this stuff is it's a futures market. It's not a right now market. So the markets are already looking ahead to what the next level is going to be. As far as new crop beans, we got an 11 cent, 12 cent range out there. We almost hit 10.90. That's really close to $11. That's going to be a big sticking point for a lot of guys this year. We made a new high for the year. We hit 10.88 and three quarters, the highest price since before, right after Christmas there on the 29th day. So again, a new high for the move, but we settled lower. So where are we going to be a month from now? I don't know. I hope we're back up at 11.30, 11.50. But I don't want to be in a situation where we let 10.55 get away from us, and then we're looking at where we were before. We're like, oh, what happens if we get below $10 beans? So defense, defense, defense. Just like we all watch football all week long. Defense is very important. Defense wins championships. And if you're a farmer, you're a commodity trader, but you're just always stuck long, right? That's why with my program, I concentrate so much on defense, because we'll be there if we get a rally. We want to be there, but in the meantime, since we don't know what the future holds, try and capture as much of the rallies as you can on paper. It's really what it comes down to. We want you to make money in the cash market. The hedgers are there to keep you in position. In the wheat, down 7 cents as well. It looked like wheat had been trying to turn higher there. We had a good rally. We had a 12 cents higher on the week last week in July. I broke that down in my weekly report. We finished lower on the day, though. So again, kind of these stutter, stop. We get one step forward, two steps back. July, Chicago wheat did make a new 1 month high. We did poke our head. We got as high as 554, but then we finished the day on our heels down at 545. So a bearish hook there, not a key reversal, but we did make a new high, then settle lower. Again, if I'm storing wheat or if I'm growing wheat next year, that we don't have a lot of meat on the bone out there. The contract low is roughly, right above 525, 525 and three quarters. We're trading at 545. There's only 20 cents of meat on the bone. But I want to protect that. I don't want to be in a situation where we get run over if these prices start going sideways or south on us. So defend what you can. In the cattle market, after kind of a neutral to maybe a little bit bearish cattle on feed report, mostly neutral. Fat cattle finished up a buck at 238. Feeder cattle finished up 245 at 362.60. March feeder cattle, if we take out 365, that will have guys talking about possibly going up. There's an old gap on the chart going way back to before we collapsed back there in October. There's a high up there at around 370 and a half. And then it goes all the way up to 375. So, is there enough tank in the gas in the tank to get us there? I don't know, but it's a good way to start the week if you're a cattle producer. We did not get hammered. We did not get run over. We opened up this morning and kind of traded sideways. It looked like it was going to go either way. And then again, we did manage to finish the day higher. And if you look at the fat cattle, we had a $2 trading range there, 36 to 38 half. In the feeder cattle, we had a $4 trading range. So a little bit of opportunity there as well. And you just can't say enough about lean hogs. July lean hogs out in those deferred months. Looks like it's going to print 110, got the 109.60. New contract highs out there. 110 is the next hurdle as well. April made a new contract high as well. We've rallied 16, 17 bucks off the low here. So that's about it. That's my wrap up for today. If you're not getting my letter, sign up for it, robinsonagmarketing.com. If you're looking for help, please give me a call, 312-638-8868. Have a great rest of the day. Take care.